Hello, and welcome to Monday, October 7th, 2024, with Jason Shapiro from crowdedmarketreport.com. So, today general markets, stocks are pretty weak. Bonds are pretty weak. Dollar was pretty flat. Metals actually came off quite a bit off of highs, gold, silver, And, dollar was pretty flat. For me, what's really driving my mind these days is this China thing. And because I look at it like this for quite a while now, I've been talking about the idea that the next big stimulus package may be a problem, because I was there in 2008 when the first big stimulus package happened. And I can tell you that the macro people that I know were fading it the whole way. They didn't like the stimulus package. They didn't understand it. Therefore, they didn't like it. They were shorting, and I watched people lose a lot of money shorting that idea for a couple of years. I can think of one person in particular who had to stop managing money because he lost so much money over the next few years, just continuously shorting it. And my idea was that, given that everybody now knows this, that the next stimulus package they would buy, because they lost all that money shorting it, and they'll say to themselves, oh, I'm not going to do that again. This time I'll buy it because I know what it looks like. And my argument is that the fact that they didn't buy it the first time is what helped it work. So if they do buy it this time, it won't work. And that's going to cause a problem. Obviously, the stimulus doesn't work. But that was my idea. What I've come across now is that very person that I'm talking about, who I worked with, who lost all this money at that time, is now totally on this China stimulus thing, loves it, thinks it's a buy, thinks it's a horrible thing to fade, et cetera, et cetera. So it's not just one person. This is a consensus view that this one person represents and always has, which is why he never really was a very good money manager. So it's just in the back of my mind, fade this China idea. Now, fading it is tough because China stocks keep going up. So I'm not going to fight the tape. But what I've noticed and what I really like is the idea of people who don't want to chase the China trade in China stocks, but they want to put on what they're calling proxy China trades. So in other words, assets that should go up with China that haven't yet. They think that they're smarter than the market. They don't respect the efficiency of the market. And they think they're going to buy things that haven't gone up yet. And I always think that that's a horrible idea. It might work for a couple of days, but as other people do it with you. But then when it fails, it fails. You're buying the weak. You're selling the strong. It's not how it works over time. It doesn't work. So how do we do that? Well, the number one proxy trade I keep hearing is the idea of buy Australian mining companies. Now, I don't trade Australian mining companies, so I can't short them. But I do trade the Australian dollar. And the Australian dollar is showing the most crowd that it's been in a long time. Okay? You can see how long the specs have gotten Australian dollar here. It's the longest they've been through the history of this chart, right? We had a news failure event right here in the Australian dollar, which was a much higher than expected retail sales number in Aussie, which indicates strength, which indicates higher rates, which indicates stronger Aussie dollar. And the Australian dollar failed on that. So I could be short the Australian dollar versus that high all day long. And I think this Australian dollar takes care of a couple things. One, it takes care of the China proxy. It fades the China proxy in a way that A, is crowded, and B, the market is actually confirming now, right? It fades the metals. Aussie dollar tends to be correlated to the metals. We know the metals are crowded here. They're not max crowded, so I can't get short metals, but they're close. But I can get short, Aussie. I can miss the metals, catch it in the Aussie, but you see how crowded these metals are, right? It takes care of this U.S. bond idea as well in a way, because bonds in the U.S. have been very weak since the rate cut, right? Rates are going up in the U.S., most likely because they're cutting rates into a time when they really shouldn't be cutting rates, right? They made an aggressive rate cut at a time when they really should be cutting rates. So that's going to be bearish long bonds, which should be bullish dollar, which then could be bearish Aussie dollar. So there's three things. It's a proxy for the metal trade. It's a proxy for the China proxy trade, to short that, and the dollar. And of course, Aussie very often is a risk-off trade when it comes off. So I am not short the stock market here. I could be short Russell here. I'm not, but I'm short Aussie. So this Aussie can kind of replace these four ideas of short metals, short China proxies, short US bonds, short Russell. You don't need to catch all these trades. You don't need to catch 3 of them. You just need to catch 1. And for me, I can only do it when it's crowded and when the market is confirming that, and that is happening in Aussie. So if those trades are to work, I can catch all that in the Aussie, which is what I'm doing here. Okay. So those are my thoughts for the day, in general. I hope that helps. Please like the video if you like it. I'd love to hear questions and comments. I particularly love comments that are against what I'm saying. I don't learn anything from people who agree with me. I learn things from people who disagree with me. So please, if you have disagreements, I'd love to hear them. And check us out, crowdedmarketreport.com. All right. Thank you. Hope everyone had a good day, and we will talk again soon.